So Katie asked me to come today to talk about the advanced payments program. So I'm going to run through what that is and how it works with cattle. But feel free if you have questions about any commodity, we can throw those in there as well. The slides just may not match exactly. So the advanced payments program, it is a federally guaranteed short-term loan program. It's meant to assist with cash flow to get your product to market. We are not a government agency, but I will gladly lend you their money. But the way that it works is that Agri-Food Canada guarantees our loans with our bank as long as we're following the rules of the program that they've set out. They also do cover the Agricultural and Agri-Food Canada does cover the interest on the interest-free portion of the advances. And then the producers pay the interest on the interest bearing. We'll get into that in just a second. So each farm or each producer is eligible for an advance of up to $1 million. It is based on your production. The first $250,000 for this year at least is interest free. There's a little, if you see this in the news, I think it started in 2021, where the act that governs this program says that the interest free portion can only be 100,000. But the federal minister of agriculture has the ability to change that if they need. So right around COVID, they started increasing it every year. It's usually been around 250,000 for interest free. One year it was 350,000. But they do have to, but every year it resets back down to 100, and then we have to make the big announcement to bring it back to 250. So we've already got the announcement for this year. It is 250,000 interest free for this year. And you will continue to see that in the news annually until they get the act updated. We do charge, so that first 250,000 that you receive every year is interest free. Anything you get over and above that is prime minus 0.1%. So just a little bit under prime. The first amount that you get, first significant amount you get is interest free, and then the remainder is just slightly under prime for you. Advances are available every year between April 1st and March 31st. So there's always a program year open. For the cattle industry, there's never a period of time where you can't get money. To be eligible for the advanced payments program, you have to either be a sole proprietor, and if you are, then you have to be a Canadian citizen or a permanent resident of legal age. Or you can be a corporation, cooperative, or partnership. The majority of the interest must be Canadian, so it must be owned by Canadian citizens or permanent residents. You have to own the cattle, and you have to be responsible for marketing the cattle, and you have to maintain enrollment in a BRM program. So as Erin just went through AgriStability, that works as the BRM security on our loans. We will also accept livestock price insurance. So every year, the federal government comes through and gives us the market rates for the year. Ideally, these rates are about 50% of the market value. So the goal of this is to give you some cash up front so that you can get your product to market. But then when it comes time to sell it and repay your loan, that you're not giving us all of your cash back. So we give the rates should be about 50% of market value, so that it gives you some cash right now. And then when you resell it, you've still got ideally 50% of your sales proceeds to do other things with. When you're picking your category, it's based on not where the cattle are right now. It is based on when you plan to market them. So if you're selling them as feeders, either between that 400 and 700 pound range, or 700 to 900 pounds, or finishing them up to and above 1,250 pounds, those rates fluctuate between those categories. So the way you would calculate this is you would say that you're going to take, you're going to sell your calves at 600 pounds. You're going to take 600 for this first category, multiply it by $1.90 per pound. And if I pull up a calculator here, just a second. So 600 times $1.90, you'd be looking for $1,140 per animal that you're planning to market at that 600 pound range. So as I mentioned, we do have to have security on the loan. The animals themselves are our security, but we do require that you're enrolled in a business risk management program, just as kind of a backstop if something terrible were to happen. So under AgriStability, we don't care what that reference margin is. There are some commodities that reference margin that Erin just talked about limits the amount that you can take for an advance. For the cattle world and any livestock under APP, it doesn't limit it, but we do require proof that you're enrolled. So we need that 2025 enrollment notice for AgriStability. And as Erin just said, you have until the end of the month to apply for that, and it usually takes a few weeks to get that enrollment notice back. A new option this year, now that we have livestock price insurance in Nova Scotia, is that you could use livestock price insurance as your security on your loan. For under livestock price insurance, we will limit the amount of your advance to the value of that policy that you've purchased, and you have to maintain continuous coverage in livestock price insurance. So if you're buying policies, you're buying it so far out. If you haven't sold or aren't going to sell your cattle at that point, you would have to purchase a second policy to kind of piggyback on that first one to get you through to when you actually were going to sell them and then repay your advance payments program. You have to keep that security, either AgriStability or LPI, until the loan has been repaid. So this is where it gets a little tricky for cattle. There are two avenues that you can go down for setting up your loan for APP. The first is a standard operation. So these advances are only available once the calves are born. We say feed on the ground, so they have to have been born. You have a good count of what you're going to have for calves. Repayments are due as you sell the cattle. You have to submit proof of sale with your payment, and they're due on a per. So we're going to have that per head rate. I just calculated at $1,140 per head. So that's what you would repay as you sold your calves. You don't have to sell them all at once. You can sell them bits and pieces here. If you're finishing in direct marketing, then we would use your slaughter slips as the proof of selling. I don't need to get into bits and pieces of cows to make up a whole one. So we would use your slaughter slips, and that's what would trigger your countdown for repayment. Repayment is due within 30 days of you getting paid. So 30 days of that proof of sale is when we would expect payment. Final payment is due no later than September 30th of the following year. So if you got a loan right now, final payment would due September 30th of 2026. So you've got 18 months to get your cattle from up to 18 months to get your cattle from whatever stage you've got the loan on them to whatever stage you've said you're going to market them. If you are going cow-calf all the way to finish, we do have a window for 24 months. So you could be getting money April 1st of 25, and it wouldn't be due back until March 31st of 2027 at the ultimate latest. Again, payments are due as you're marketing, so it's within 30 days of you getting paid. Those are just the line in the sand of when the payment has to be repaid. We do charge penalties if you don't pay back within that 30-day window, or if you pay back and don't provide proof of sale. And I know that seems a little counterintuitive because you've paid it, but the point of this program is for you to get your product to market. So we also have to validate that you got product to market, and then follow those rules of repaying within the 30 days. So that's a standard operation. It's pretty easy. You get the money for the animals that you have. You are going to repay it as you sell the animals. The alternative is a continuous flow. So this is meant to be like a genuine feedlot where you're always in, always out. You're constantly buying and selling. And so that standard operation doesn't make any sense because you would repay it within 3 months and then not be eligible for new money. We'd always be talking to each other, and it wouldn't be to the benefit of anybody. So continuous flow gives you a 12-month window. So you would ask for an advance on what your smallest amount of inventory would be. So what's the lowest you're going to have on hand at any one time? That's the maximum that you can ask for an advance. It's still based on what weight you plan to market them at. And you still have to have them when you ask for the advance, but it's not based on your annual marketings. It's not based on the number that are going to come through your feedlot in a year. It is based on, if I come on your farm at any time, what's the minimum number that I'm going to see. When you repay, the benefit of the continuous flow is you repay at the 12-month mark. You're going to repay your whole advance at one time. And the proof of sale that you can give can go back the full 12 months. So you don't have to have it within 30 days or any of that. It is, you can use any of your marketings from the last 12 months to repay, to validate those sales. You cannot use livestock price insurance for continuous flow. We try and make the APP application process as easy as possible. There are some forms, they're between 18 to 25 pages. About 8 of those are terms and conditions. So they're not too bad to actually fill out. We do require proof of Canadian residency. So we either need a passport or birth certificate, your AgriStability enrollment notice, or proof of LPI purchase. Most recent completed financial statements or tax return. And for your tax return, we're specifically looking for your statement A, which is the farming income. We need a void check so we know where to deposit your money. And then if you are a corporation, we would need an incorporation certificate and a shareholder agreement. What we're looking for there is to know who owns the voting rights of the organization. So I'm less concerned with preferred shares that are just getting dividends and more concerned about who actually gets to vote and make changes to the farm. Once we get that stuff, we're going to run a credit check on each individual or shareholder, and we're going to do a lien search. Here we're looking for a lien on anything that could get in your way of repaying us. So the cattle, obviously. We're also looking for liens on your accounts receivable or your bank account, or a general security. So if you've got a Visa with RBC, they probably have a general security on the farm, and we're going to need a priority agreement signed. We typically don't have a problem getting those signed with really anybody. The major banks sign them because they don't want security in your cattle, and we are only taking security in your cattle. They want the bigger things that they can sell off easier if they had to follow through on that. So it's usually not a problem to get those priorities signed, but they are required based on that search. And then we will also register a lien against your farm in the form of the cattle. We will also have to do an inspection. So we need to come to your farm and make sure that you have cattle in the quantities that you've asked for a loan on, and don't just have like 2 goats in the backyard. So it really is that simple. We try and make it as easy as possible. If you're a repeat customer, Stephanie, who's on the call today, will actually start the forms for you. The first year you have to submit the void check and incorporation certificate and all of that, but those things don't change year to year. So year 2, we'll just photocopy those and move them forward if nothing's changed. The first 250,000 for this year is interest free. And then anything above that is prime minus 0.1%. And then as long as you repay as you sell your product, or if you're in that continuous flow, repay at the 12-month mark, then there's no additional penalties. One thing that is missing on here, sorry, is the admin fee. We do charge an administration fee, and it's based on the total amount that you receive as an advance. So it's a tiered system. Our lowest is $350. And then if you're up the million mark, I think it's like $8,000. And that covers helps cover the inspection costs. It covers the reporting that we have monthly to Ag Canada, and just general helping applications and collecting payments and all that admin time. So Stephanie Tuttle is on this call, and she is our administrator for APP. Her contact information is here. If you have any questions, I'm happy to answer them now, or you can reach out to Stephanie at this information, and she can answer them more one-on-one for you.
I have a question.
Sure.
So I use the APP program already for my orchard.
Okay.
So it sounds very similar. Say I get my 250,000 and that's set up for the orchard. Am I also eligible to use it again for another industry, or is it just a flat rate 250 per business or per person?
So you're still eligible to use the program, but you would not get additional interest-free money. So you can still use it up to that $1 million max.
Right.
But you would, if you got money from, so if you're getting 250,000 from the fruit growers, and you wanted 100,000 for cattle, the 100,000 would be interest bearing, but it would be at that prime minus 0.1%.
Okay.
But yeah, you're able to take it out for multiple commodities and multiple administrators, because I know that the fruit growers don't do cattle.
Right.
So you can stick with them. It just, you don't get extra interest-free money.
Okay, that's perfect. Thank you.
Yeah, no problem.
So I've got a question for both. So let's say I'm a producer. I'm interested in the advanced payment program. I'm not taking advantage of any of the programs. So my first step would be to contact Erin, probably, about the advanced payment program. And I would be mindful of that April 30th deadline.
So I was going to say, if you called me about advanced payment program, I just let people know that yeah, that like AgriStability would be needed, and I'd help them with that, and then I would refer them to the whatever board was doing. So if it was cattle, I'd refer them to ACMA for the cattle yeah, side of it.
Yeah, sorry, I totally misspoke. So I meant the AgriStability would be my first step. Apply for AgriStability, be mindful of that deadline. And then my next step would be to apply through ACMA. Okay.
Yeah. And realistically, if they're looking for APP, they're probably going to call Stephanie first. And she's going to, one of her first questions is going to be, are you enrolled in AgriStability? If not, call Erin. Here's her contact. Because that's, yeah, that's usually the way that it goes. But yeah, so you need to enroll in AgriStability. And while you're waiting for that enrollment notice to come, we can start the process of the APP application.
Okay, perfect.
And I was just going to say too, I know sometimes that timing is like a big issue for cash flow with producers. So if you're ever in a situation where like APP, it can't advance because you're waiting for that enrollment notice. I don't have access to the system, but I can request, as long as it's been issued, I can request a copy, and then I can also forward that over. So we really want to make it be as easy, like Kara said, as easy as possible for producers and kind of reduce those barriers.
I'll say thank you very much to Erin and Kara. Really appreciate you sharing that information.
Thanks for organizing this, Katie.